So, thank you for tuning in to ITA's Expert Corner. Today we have Eugene Marshall, who is our tax expert and ITA partner. So, I'll allow him to give you an overview of his career and why he's our tax expert, and then we'll dive into the questions.
Very good. Well, thank you for having me here today. It's nice to be here, and I'm glad that we have an opportunity to be able to give folks some value and some things that they can actually leverage and use and ultimately implement in their business, in their personal affairs as they contemplate or transition abroad. For those who don't know me, my name is Eugene Marshall. I am the founder and CEO of Magnolia Tax Services, and Magnolia Tax Services is a tax advisory practice that specializes in tax planning, tax preparation, tax debt resolution for individuals and small businesses, and of course, we assist our clients with the bookkeeping and the accounting as well. And what makes us special and different is that we are a 100% virtual tax firm. So no matter where you are located, if you're located in Rome, if you're located in Greece or any parts of Europe or South Africa, wherever it is that your home is, we have the capability to be able to assist you. And we work with a ton of folks that are U.S. based as well, since we're founded in the U.S. So yeah, that's Eugene.
All right, perfect. So let's start off with planning. So a lot of the questions that I get from ITA is like, what about my taxes? How can I prepare to get there? What are the implications? So if we're looking 3 months ahead from a tax perspective, what does planning look like?
It's very important. It's very important. Here's why. So there's in the tax space, we have tax planning, and then we have tax preparation. Most people, they only know about tax preparation. They don't know about tax planning. So they start looking for their new tax professional, tax preparer, January or February come tax time, but that's a little bit too late because we're just recording the information from the prior year in your tax return. That's all we're doing.
Yeah.
Okay, of course there are some other nuances that come with that, but there isn't much flexibility or strategy or value that we can really offer to a taxpayer. The ideal scenario is where we are meeting and consulting and strategically partnering with that client periodically throughout the year, and we can start having those conversations around, hey, how much income have you had for the year? Or, hey, I'm planning to relocate to Spain or relocate to other parts of the continent of the country. Well, excuse me, not the country, but the world.
Yeah.
And so being able to plan and have those conversations as quickly as you seriously begin to think about that transition is important.
Absolutely. So you shared a bit about tax preparation, which I know I am guilty of myself at times. But what deadlines should we have front and center when we're thinking about preparing and especially planning from a tax perspective?
Okay, that's a great question. So when it comes to deadlines, depending on what you do, if you're just an individual that perhaps maybe works a W-2 job, or you're retired, or perhaps maybe you're someone that is just simply a full-time entrepreneur, small business owner, or C, maybe you're the individual that wear both hats. So it really just depends. So we want to understand, where do we line up out of those three scenarios. But the first thing that's important to note is that if you're planning to transition out of the country, we always have to keep in mind, as long as you are a United States citizen, these are some important deadlines that you want to make sure that you know. So April 15th of every year, that is the tax deadline day.
Yes.
Now, if it falls on a weekend, it always extends to that following Monday. And if it extends to that following Monday, then it may be like the 18th like it was this year, or the 19th, whatever it is. So that's the first deadline if you are just an individual working a W-2 job, or perhaps you're retired, or maybe you are working a job and also operating and managing a small business. The other deadline that you want to be very mindful of is the March 15th deadline. And the March 15th deadline is for our entrepreneurs that are operating and managing multi-member partnerships. So it's important that those partnerships are filed accurately and according to the schedule that the federal government gives us, which is March 15th. And or if you are currently being taxed as an S corporation, if your entity is being taxed or your company is being taxed as an S corporation, you want to make sure that you hit that March 15th deadline every year. So as a U.S. citizen, depending on where you fall in those three hats, you want to make sure that you pay attention to March 15th and April 15th. Now, if you're transitioning out into another country, it's important for you to familiarize yourself with the local laws of that country. And so their tax deadline days may be completely different. So it just depends on what country you're essentially going to.
What type of steps can I take to minimize my tax liabilities?
Okay, so here's how it works. So the United States government basically states that ultimately they're going to tax you on your entire worldwide income. As long as you're a United States citizen, they're going to tax you on your entire worldwide income. And they've recognized and they realized that double taxation is a real problem. So what they came up with is the foreign earned income exclusion. And it basically states that you have the ability to be able to deduct up to, in 2023, up to $120,000 worth of foreign income. Okay, so this is helping you from having to ultimately be a taxpayer that experiences double taxation. So that's the first thing they give us is a deduction. Okay, the second thing they give us is the foreign tax credit. What's the foreign tax credit? So how the foreign tax credit works is, so in the country that you are a now resident of, you're going to pay taxes there based on the income that you're receiving and deriving from that country. Choose a country. Brazil, for example. Let's say, so you're working in Brazil, you've transitioned there, got a job, and you pay taxes on that foreign income to the country of Brazil, let's say. So, well, you've already paid taxes once. So to avoid the double taxation, what happens is the United States government or the Internal Revenue Service, the Department of Treasury that houses the Internal Revenue Service, they'll give you a credit up to the amount that you paid in foreign taxes to Brazil. Which ultimately gives you the ability to avoid double taxation.
Awesome.
And to minimize its effects as best as possible.
Yeah, we have to protect our bottom line. So thinking about managing our finances, we typically have bank accounts here in the U.S., but then we're moving away. What are your thoughts on foreign bank accounts from a management perspective?
Yeah, that's where things get a lot interesting. So here's the requirement. If you have a foreign bank account and at any point in time in that calendar year, if the aggregate value of that account exceeds $10,000 or is $10,000 or more, you have to file an FBAR report on your tax return. An FBAR report, an FBAR is nothing more, nothing less, but you're just saying, hey, United States government, I have this amount of funds in an account offshore. Okay. Very important that you do that, because if you don't, there are very steep penalties for not reporting the income. And those penalties are very steep.
So we want to make sure we do that.
Absolutely. Or you'd be paying $12,500 for essentially every year that you failed to do so.
Oh, wow.
Willfully failed to do so.
Yeah. Okay. So we got to remember that $10,000 threshold to make sure to file that report.
Correct.
Speaking of that, let's talk more about compliance and reporting.
Sure.
Right. So that's one from a bank account's perspective. What are other compliance and reporting requirements should we keep in mind?
Yeah, great question. So, as long as you are a United States citizen, you're gonna always be filing a United States tax return, right? That's one of the first things we want to make sure that we're doing to make sure that we're in compliance. The second thing that we want to do is we want to make sure that we record all of our income, right? Income that's deriving from the United States and income that's deriving from Brazil or some other country that you decided to become a resident in. The third thing is you also want to declare any assets that you have that has a value of over $50,000 in that foreign country. Very important. The U.S. wants to know what its citizens own in other countries.
Yep.
Okay? So it's important that you do this because if you don't, again, it can lead to very steep penalties. And even in some cases, if you willfully don't do it, it can also lead to imprisonment.
Oh boy, definitely not a jail person. Not doing that. Okay, so just to kind of wrap things up, when we're thinking about our residency overall and our taxes, just 3 quick things should I keep very top of mind, or even to ask you as a concierge member of ITA and using your services. I'm a new resident in Brazil.
Yep.
What should I do?
First, you just moved to Brazil? Okay. If you just moved to Brazil, first things that you want to do, and actually you should have done it before, but you want to start familiarizing yourself with the local laws of the country. And you want to know what you can do, what you can't do. There are some countries where you can't take photos of certain buildings, or you can't curse out loud. And you want to make sure that you are understanding what the local laws of that country are, and abides by those laws. And then once you understand that, let's take it a bit more further and tie it back into what we're talking about today, is you want to understand how their tax system works. What you need to report on, how often do you need to report, when do you need to report, and how do you report. You know, those are all the things that are going to be extremely important.
Absolutely. Well, first, thank you for visiting us. Really appreciate your time and you being able to educate me further and the rest of the ITA membership on how we can better prepare ourselves from a tax perspective as we go on and live around the world.
Yeah, absolutely. Thanks for having me. And one last thing I'll add to it is that, hey, the United States government also has tax treaties with other countries, right? And these tax treaties basically gives you the opportunity for your income to be taxed essentially at a reduced rate. So as long as you're working with an individual or tax practice that understands tax and understands how, or can give you some direction on how to navigate in that country that you're intending to move into, you're going to be in good hands. And Magnolia Tax Services, we would love to be able to support you and offer you any assistance that ultimately you would need. And it all starts with just being able to have a 15-minute discovery call. It doesn't cost you anything, and ultimately we can see what's happening.
So as you're preparing to travel abroad with ITA, we can start planning what our tax situation will look like for that specific country. Thank you, and we will be back shortly. Bye.